Welcome to the Dividend Talk podcast, episode 78, our 2022 watch list. What's up, guys? Welcome back to another episode of Dividend Talk. Today, we're going to share with you some of the stocks we'll be looking at in 2022. We'll have a look at some of the news of the week, analyze portfolios, and take some questions from our listeners. See you on the inside. Hey, European DJ, how are you?
Thanks, Derek. I'm really doing well. It's Sunday night, actually, that we're recording this. And to all our listeners that have been waiting for the late release of this podcast, holidays are coming up, so it's all to blame on me. I'm outside of the country, back to my roots, the Netherlands. So, yeah, I'm doing really well. And it's just great to see the family and friends again after 2.5 years, 2.5 years because of this frigging pandemic.
Wow, that's a long time, and I know you're back in the Netherlands, and that's brilliant. But it's so bad news with lockdowns and all. Like you just think, just when you think all this was behind us, and now we're back into square one. But I'm so happy that you're back with family and get to spend some Christmas. So don't worry about missing deadlines. That's what Christmas is about. Spending time with family. Prioritize that. We have a whole year ahead of us next year. So
Yeah, but come on, we need to keep the rhythm of every weekend, right? We've got really, really many listeners, so I'm really happy for this. And by the way, all bad things have a good thing because I started ordering all my Christmas presents via bolt.com because there's now a hard lockdown here, which means all shops will be closed. So yesterday I ordered all my goods via bol.com, which is a subsidiary of Ahold that they
yeah.
intend to spin off. So actually I've been paying myself a little bit with these purchases for the Christmas, and otherwise I would have wasted the money somewhere in the shopping streets of one of the major towns here. So actually it's not too bad.
It's good to see you looking after shareholders. And I have to admit, when we did not record on Friday, I kind of took advantage a little bit. We had a bit of a work night out, and I'm pretty sure that I've helped Diageo shareholders quite a bit. it was it was quite a night.
It's nice how being a dividend investor allows you to reflect on all your behavior and how you're actually contributing to paying your own dividends.
Yeah, I didn't feel bad for drinking too much.
Isn't it a bit like like what you have these with these credit cards that are popular in America with these cashbacks? Because every time I tank at Shell or when I buy something at bol.com, I'm actually getting a cashback, right? In the end of the quarter or something like that.
But on the flip side, it also shows that you believe in these companies, not just on paper, but if you use their products, so if you go and top up at Shell and use Bol.com, it means it works for you as a customer,
Yeah,
which helps you as a shareholder. So I think it's a win-win.
cool. So hey, did anything caught your attention this week in the news?
Other than coronavirus, you mean?
Yes.
I'm not even going to mention that anymore because it's doing my head in. But
Let's skip it.
there's been a couple of things. I think 3M, is it a spin-off? I'm not sure if it's a spin-off. They are merging half. Is it the food safety business with Neog? I think it is
Hmm.
it?
Hmm.
Or Neogen? I can't remember the name, but they are merging the food business. We're seeing lots of companies. It seems to be a trend that we said that are spinning off or selling parts of their business, and 3M are the latest one there. So, and I haven't dug deep into the details. I have to admit, it's just the headlines that I've seen, but
Hmm.
it seemed to have a positive reaction in the stock market. 'Cause I know they popped about 2 or 3%, which was
Yeah.
unexpected. So a lot of shareholders seem to like this deal.
Yeah, I think it has to do with the valuation attached to it. I think what was it, 5.3 billion
Yeah.
at a multiple of approximately 32 or 27 when it comes to the 2022 adjusted EBITDA, right? One of those
Adjusted.
fraudulent bookkeeping measurements, but which is just highly valued. And from that point of view, if you can spin off things at a 30 multiple, what you're actually doing is just getting more worth for your assets. So it's really not bad, right?
Yeah, and what they're saying here is that 3M shareholders will receive approximately 50%,
Yeah,
50.1 of the combined company. So
yeah,
I mean, it looks like a good deal on paper,
yeah.
and it's one to look out for.
So I own some 3M, and if people are worried about it, I can't imagine them cutting their dividend because of this. So I'm totally not worried about this at all from that point of view. I think a company like 3M can spin off another 30 of these kinds of businesses because such kind of industrial company it just is. So, but talking about which, what really surprised me this week was Novo Nordisk.
Okay.
Their share price already, the American listed shares, they went 8% down after the news, and I think it still needs to hit the European shares tomorrow morning. So if you own some Novo Nordisk, just don't be surprised, because what happened is that one of the contract manufacturers for their that is filling the syringes of Vegovi is the brand name,
Yeah.
has temporarily stopped deliveries and manufacturing because of manufacturing issues. And when it says good manufacturing practices, this just means that they're screwed because this manufacturer has just bad practices and they probably failed on some safety tests. Yeah, that's what it really
Yeah.
in practice
Yeah.
means.
Yeah. I'm quite familiar with GMP. It's something we have to follow quite
Hmm.
heavily, and I'm sure Novo Nordisk do as well. And it's quite surprising actually because usually in this market, if you are doing your job correctly and you have
Yeah,
quality and it is something that you can genuinely spot well in advance and get
yeah.
ahead of. It's not
Hmm.
hard to do this. So to have to stop deliveries and manufacturing because of this is not a good thing. It will take some time to rectify that. I'm sure they're after being
Yeah.
given some direction and they will have a time limit to hit that. But it is, I mean,
It will take
if
them more than 6 months. Yeah, they said in the
easily,
second part of 2022.
easily,
Yeah.
because there's a lot of paperwork around. Like it's easier to
Hmm.
get it right the
Yeah,
first
yeah,
time,
exactly.
and now you have to go back and get all the paperwork right. But it's I mean, if you were using one of these syringes or using these
Yeah,
products, I mean, and you see something following good manufacturing practices, it doesn't fill you with confidence, does it?
yeah,
Even if
yeah.
they get it right, it wouldn't really fill you with confidence.
Exactly, exactly. And in the end, I think an 8% decline here is really not bad because the company was, I think I was looking at it last year around 420, 430
Mm,
Danish crowns. It's trading now around 750 still Danish crowns. So this drop is really nothing compared to where it's supposed to be. It's trading in a multiple of 35. So this is just a very expensive company. The company announced that it will not impact their financial forecast.
yeah,
So bottom line, it shouldn't even matter, and still the share price responds like this. I think it's a little bit in the trend of all the other growth stocks that we have seen declining. If there's just one little bit of news that's not according to perfection, they get massive price
yeah,
declines at
yeah.
the moment. That's the market we live in now.
Yeah, look, and in this industry, recalls happen. It's probably a little bit more common than what is reported. It probably happens. It's just this.
Yeah.
This is on a scale where it can't meet the demand in the US, which is why it's making the news. If they
Hmm.
could still meet that demand, you would not even have seen this unless you dug deep into the
Exactly.
archives. So
Exactly.
it's not uncommon. And as you said, they're heavily valued. Investors need news like this to
Yeah.
bring them down into more manageable ratios. But as you said, it won't. It shouldn't impact him.
No.
It shouldn't impact him a whole lot. And speaking of one of our favorite companies, Shell, we
Yes.
spoke. We know we talk about these quite a bit, and we've spoke about their transition into more energy and renewable energy, and we're wondering how that'll play out. But they are now trying to acquire US-based solar company called Savion, I think.
Hmm.
Um, so this company, I think at the moment has about 18 gigawatts of solar power and battery storage.
Yeah.
That to put that into comparison, Ireland, back when I was doing electrical engineering in college, I studied a little bit of this area, and back in 2015 and 16, we generated about 3 gigawatts of
Yeah.
renewable energy. So that that is 6 times the amount of Ireland that they are
Yeah.
generating. Now we're probably up around 4 or 5 gigawatts now, but it's still
Mm.
an awful lot of energy to be taken over
Yeah.
and generating. But Shell are aiming to sell more than 560 terawatt hours globally per year in 2030. That
Yeah.
is certainly more than what Ireland produces in a year.
Yeah.
It's
So
crazy.
the only thoughts I still have around this is like, show me the money.
Yeah. How are they going to make money off this? But
Yeah.
they are serious in pushing this ahead.
Yeah. But serious, they are doing like they have an investment goal of 2 to 3 billion per year, and this is falling in line with that. I think what was their capex, 15 to 18 billion still when it comes to
Yeah.
also all the others. So is it really serious at 15%, 20% of their total investment portfolio? I think
Yeah.
it's it's really hard just to transition out of oil into this electricity business. I would love to see what the margins really are and what the returns on investments are. I
Yeah.
believe that by next year they should be able to share some of those figures because they are now doing all these acquisitions. It's about time that they start to be a little bit more transparent on that, in my opinion, because it's for me really important to understand in the investment case, like what are the cash flows going forward, right? That's for me the biggest risk that I see. At the same time, their reserve line has reserve. That's it. Capacity has been declining. Their reserve life, so it was
Yeah.
like 11 years, few years ago, but every year goes a year down. So on that track, in 10 years, they won't have any oil anymore if they don't acquire enough new oil fields. So I want to see next year a little bit of transparency around this.
Yeah. And given the way the company operates, I'm sure we will.
Yeah.
Maybe next year might be a little bit too soon. I know there's in the beginning of acquiring these companies, so they might not have a full picture, but they might start to lay it out. But certainly by 2023, I want to see where that money is coming
But
and
I
how.
believe Ben van the Bird is always listening to our podcast on the
Hmm.
Monday morning when he flies from The Hague to London. So I think when he hears this, he will ask his leprechauns to quickly compile the numbers for us.
I hope so. I hope so. So, the main topic this week, I suppose, it's coming to the end of the year. We know we're going to maybe do a reflection on our portfolios and stuff. Maybe the last show of the year, which is typically
Yeah,
maybe New Year's Eve or the day before. But I think it'd be nice to pick some companies that we may look out for in 2022. And I'll be honest, it's not something I've given huge amount of thought to yet. I'm going to wait till I finish work, but I've kind of come on this with a scenario of lockdowns have started again, and I don't know if we're going to have a market crash, but we know what happened last time. So
yeah.
what did I learn? What companies would I like to buy? And we take it from there. And you have some really nice companies there. You have a mix of European and US companies
Yeah, yeah,
as
like
expected.
always, right? So let's just be clear here. I've got like a really wish list, right? So I'm
Mm.
in. If you go to my blog, you see there my portfolio allocation strategy. You see a list of 40 stocks
Yeah.
approximately, but there are stocks that I don't even have a position in. So one thing that I really, really hope for is, for instance, that Nike will come at reasonable prices. Nike has been for me so expensive for years, not even worth to buy it for the dividend, right? And I would just wish on something that goes wrong with Nike, not something that will kill the brand or something like that, but maybe some China political issue or something like that we know will disrupt a little bit the sales there, but
Yeah.
then that we get an overreaction in the market. I know it's all wishful thinking, but that's what I'm hoping with the sneakers here.
We thought that was happening. Remember, there was some news
Yeah,
and it was affecting Nike and Adidas, but that just kind of petered away, didn't it? It just went away, and Nike went back to business. I know that was around October. They must have dropped
yeah,
8 or 9%.
yeah.
And at that time,
For me, it needs to drop 50%.
I, I, I like to see them under $100 for sure.
Yeah,
Anything above $100 is too expensive for me.
but
Um,
my son told me this week when I was talking to him about around these kinds of things. He said, "Father, you can keep hoping, but only Einstein really knows." But
and 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 he's
yeah,
right. And he's right.
Exactly. So for me, if you really ask me honestly, I would love to see Nike being added to my portfolio as the top number one stock. I don't own it. I've been looking at it for a long time. I just can't buy it. It's too expensive. So it's really testing my patience here.
Mm,
But this brand, I love it. I read the book also of the founder,
yeah,
Shoe Dog.
I'm halfway through it actually. Yeah, it's good. Good book.
Exactly. It's a brilliant book. I
Mm,
just want this stock in my portfolio, but not at any price.
yeah, I don't want to ruin the book on anyone. It's worth to read, but the persistence to set up this company is something
Oh yeah.
that I admire. I mean, it's easy to look at that company now and Phil Knight and think he had it easy, but boy, he
No,
didn't. He
no, he hadn't.
and he, he had every reason to give up and quit,
Yeah.
but I mean, it's incredible. So I highly recommend reading the book. Looking at the share price, I'm looking at the share prices now, and back in March 2020, they were about $60.
I should have purchased then some. I was looking at it then, but still it didn't even meet my valuation criteria at that time.
Wow. So if they don't
Yeah.
if they don't meet it at $60, they're certainly not going to meet it at $160.
Yeah. Maybe I would be in hindsight, I would be a little bit less strict probably and allow for the quality to speak for itself.
Yeah, yeah.
Yeah. What's your number one stock if you had the chance?
So i Texas Instruments is one that I really want to own more of. I know I'm adding it slowly and surely, but I suppose one thing I've learned after the last crash is to focus on quality and companies that you really believe in
Hmm.
future. I took some gambles on like the Walgreens, but they are gambles. They're turnaround stories. But companies like Texas Instruments, they are companies that will be around in 10 years' time without question. You can just buy them and forget about them. And that's probably where I want to where I would go. I was probably my number one pick would be someone like
Yeah.
Texas Instruments
And why Texas Instruments and not Nvidia or AMD or something like that?
because they make brilliant calculators. I mean, I'm not completely nailed down on Texas Instruments. I could look at Nvidia as well and maybe add some of them, but it'd be certainly a company of that magnitude. I just feel like Texas Instruments have been around a lot longer. The brand is
Yeah.
they have more brand power. I feel, but that's not to say Nvidia would not come into the equation.
Yeah.
But I
Yeah.
feel
Yeah.
like I would focus a little bit more on just top quality companies at that time.
Yeah. Yeah, speaking of which, another company for me would be, and I know I'm asking for a lot here, but it would be L'Oreal. I mean, this French company as well. And what I also love about it, when you own it for, I think, is it 2 years or 4 years, you get a 10% loyalty
Yeah.
dividend to it.
Hmm.
But L'Oreal for me as well, is like this brand is just iconic. And what I love even more, it's not just the lipstick, right? It's the whole holding structure that they have with all these billion-dollar brands behind it. Really popular also in Asia and such. And to take a European brand, make it also so popular in Asia, speaks really of its brand power and what it stands for. So I would love to have this company also in my portfolio. I know the Kleine Capitalist and Financial Shape. Some of the people we interact with on Twitter have always been buying it. They are really happy with it, of course, because of the share price appreciation. Um, I don't want to buy a stock at a 30 or 40 multiple. It will take me too long for it to grow into its earnings. I doubt that L'Oreal will ever crash next year, but if there is one opportunity, I will take my bazooka gun and really shoot at it because it's
Yeah.
also one of those stocks where like quality is all over the place. This is a stock that's there to stay for the next decade
E-
easily.
Easily. I mean, the brand power alone from L'Oreal is
Exactly.
incredible. We all know the advert because I'm worth it, but it's hard to see another company come in and penetrate what they have. And that's
Exactly.
and that's I think key as investors looking back what I said about Texas Instruments, you really want quality. And having a company with such a huge landscape worldwide that is hard to penetrate is not an easy feat. So I think that's a great pick actually.
Yeah.
But as you said, it's probably wishful thinking. I don't think you're going to get them at any sort of price. That I mean, even I'm looking even during the crash and just going back. they were still nearly 300 or 300 euro.
Yeah, it's insane. I don't know why we pay so much for the lipsticks and everything from a share price point of view, right?
Mm.
But it's this market. I hope it starts tanking anytime soon. Maybe when the inflation kicks in or something like that. But what's your next stock that you would be interested in buying?
So my next one would be Microsoft. It's a company. It's probably on your list as well, but it's
Yes,
a company we know quite well. Company we analyzed on this show. I mean, I kind of regret not buying more when they were 200. I was being a little bit, as the quote you always being, was it pound
penny
wise
wise,
or penny
pound
wise,
foolish.
pound foolish? It was being like
Yeah.
that. I was waiting to get to 180, which is $20, and they just skyrocketed. I'm happy that I did buy a small bit at the time because I would have kicked myself otherwise.
I remember us talking about it where you said, I'm waiting for 100 days. Said, just buy few, just buy few, remember? And so I'm
Yeah, yeah,
glad you did,
yeah.
because otherwise you wouldn't have had ownership at all. But for me, the same. If Microsoft comes down to 250 or low 200s, I would definitely be buying. Not sure if it comes down there. So maybe I would buy just, 4 or 5 shares at 250 or something like that. But brain stock, such an Adela's killing it. And I don't see them stopping either in the next decade. I think we're seeing a still decade of growth. Not sure about share price because it is richly valued, but
Mhm.
definitely in revenues and profits
Yeah,
and dividends. I can easily see them still for the next 10 years still doing more than 10% annual dividend growth. I can easily see that.
yeah. I mean, they have a pretty decent history with that, so I don't see why that would slow down. They've got so much money, so much cash. They have to do something
Exactly.
with it, right?
Yeah.
And who makes it on third place on your list?
Well, let's say like that. I think there's still two stocks left that I think are more realistic to buy next year. So the first one is Johnson and Johnson. It's trading around 165. My fair value probably brings it at an attractive price around 150, 135, 150. So for me, it really would mean a 10% decline, and this should
Yeah,
be possible. And the spin-off doesn't change a thing in my thinking here. So it must be possible to get a 10% decline on Johnson Johnson, and that's really when I will nibble in some more shares again.
yeah,
The good thing is I took the nice opportunity last year in the heat of the pandemic when it was trading at $115 per share. I bought a larger tranche than I would usually do at the time. So I'm really happy and satisfied with that because it showed me that I have the balls to double down when it's needed.
yep,
But I would love to still own more from it because it's now like a mediocre position in my portfolio, and I would like it to be a top three position in my portfolio. So, at any chance, I would like to double it, the position. And if it declines 10%, we should probably start seeing around 3% dividend yield almost. And the price to earnings, forecasted price to earnings based on the guidance that they are giving is really not bad. Probably trading around 15 to 16 PE then at that time, which I think is really, really good. And I already think it's not so expensive at the moment. It's just more like that I'm a bit greedy on this one from a yield point of view.
yeah. They're close to dividend yield is 2.5, I believe, the last time I checked. So it's close to your threshold.
Yeah, exactly, exactly.
Close.
So 10% should do.
I seen some news briefly today, obviously COVID related, that they recommend Moderna and Pfizer
Yeah, the
over
Janssen
Johnson.
vaccine seems not to be so effective.
Yeah,
So maybe that brings some bad press. That would be really nice.
yeah, yeah. Maybe that could be a catalyst, along with spinning off a bankrupt company. But who
Yeah,
knows?
yeah, yeah, exactly. And then the next one, in case of this would be actually a blessing if we get more COVID-19 here, is realty income.
Mm,
Yeah, after the merger with Right, I think there's enough possibility for dividend growth. It's now trading around 67, if I remember correctly. Consider me a buyer again at 60. So it should also be possible, 10 to 15% next year. I think it should be possible. And for me, both Johnson Johnson, Realty Income are those stocks that are not like on my ultimate wish list, like
Yeah.
L'Oreal and Nike and Microsoft because of its price, but these are still high quality companies that I really want to build my portfolio around. They are really a fundamental anchor in my portfolio. So those two stocks, I see them as more realistic to acquire more of next year.
Yeah, they're kind of companies that you just forget about, isn't it? You can just add periodically
Yeah.
and just and work away in the background. Realty income was going to be on my list, but I kind of assumed they might have been on yours, so I stayed away. I have a couple more. So Intel is one.
Yeah.
We know that they're spending 20 billion on new fabrication uh, factories. I think they committed to have one in Malaysia. I think I read this week. They're
Yeah.
spending 7.5 billion on that out there, so they're really going ahead with that. Pat, I suppose Pat has been incredible since he's came in. I still think that we might see him dip a little bit more. I believe it's a 2-year plan until we start to see the results from. Look, they're playing catch up. We know they're playing catch up, but Pat is doing and saying all the right things. I still want to see the underlying numbers next year to see that it's not all smoke and mirrors. We want to see results.
Yeah.
But definitely company. I think I sold actually a cash secure put on them at around $45, I believe. So I'm
Yeah.
happy to own these guys at around 45. I think that's quite a good price. Even around I think 50 under $50 is quite good. So they are on my list. If we go into lockdowns and we see oil tanking again and it drops, I will definitely be buying more Shell. If not Shell, somebody like EOG Resources
Mm.
in around
Yeah.
that. So and then in terms of real estate investment trusts, Realty Income are obviously there, but IIP is one that has been on my list for a long time.
Yeah.
The Wolf of Harcourt Street has been on at me since day dot to look at this company. And it's probably one, look, we know they're in the cannabis industry and that's going to grow. And it offers a nice bit of diversification away from your regular REITs as well, because
Yeah.
you could see that industry growing. You could see that industry growing even more if we have some sort of economic crash where people tend to turn to something like cannabis, maybe. But even with its medical use, it's going to be
Yeah.
more and more and more over the coming years. So it's a good way of getting into that industry without being in that industry.
Yeah, it's so funny, right? I think our listeners, they hear us now talking probably for 10, 15 minutes about these stocks and what they hear all the time. Oh, I wish a crash will happen. I wish it tells us we are dividend investors because we're in it for the yield, right?
Yeah.
We want to buy passive income.
Hmm.
So the only thing we can really wish for is a nice crash that is really having a blast zone in a certain area that is not an industry that is core to our portfolio.
Yeah.
So let it be banks or something like that. Let them really screw up, blow the shit out of it, and that all those people in the world start index selling, sell those bloody indexes, and please give those stocks to me,
Yeah.
at the cheap. That's what I'm just. That's my biggest wish for 2022.
I mean, total return is important, really, is on the face of it. I know we speak of dividends and what we earn in dividends, but total return is important. It's what you want as an investor. When you see your share price will usually grow when a company's revenue and cash flow and earnings are growing. So it usually grows with it. So that's what I like to see. But before that, I'm in the accumulation phase. I need these companies to come down in price.
Exactly. And what I've seen over the years is that if dividend is growing at a safe threshold, right?
Hmm.
If it's growing, then share price will follow.
Yes.
Yeah, I prefer that than that share price is leading.
Yeah. I mean, I bought. I don't buy many companies that don't pay dividends, and Alibaba's one of them. And look how shit that has performed since I bought it.
Exactly, exactly, exactly. I feel you. I feel it even harder, probably. But hey, yeah, well, hey, EMF, I wish you really that you get all those stocks in your basket next year. That would be just tremendous. Um, Speaking about baskets, let's go to the next topic because we have Maarten who submitted his portfolio to us. this week, and he wanted just to hear a little bit about it from us. So a little bit of background: Maart is from Twitter. He started investing in the first quarter of 2020, so really when shit hit the fan last year. And his goal is to retire early. According to his latest calculations, it's 2033. His strategy is to focus on defensive stocks with dividend growth, but also some diversification via worldwide ETF. And if how you say it, having 15% allocated to growth stocks. So let's say the tech stocks and such. So he's sharing his top 10, but let me share a little bit. The first ticker is VWRL, which is an ETF, a worldwide ETF index. He owns 20% of his portfolio into this. The second ticker is BMI from Bristol Myers, 9% allocation. The third stock is BATS, which is BATS ticker for British American Tobacco. He owns 6% allocation here. The fourth one is ticker symbol PRX for Process, 6% allocation, and the fifth one Johnson and Johnson, also with 5% allocation. For people that are international and not know what Process is a company that is the biggest shareholder in Tencent with 30%, but is also in the food business. I believe it tried to acquire one-time takeaway. It failed. So it's kind of in these tech startups and such as well.
Yeah.
So having seen this and also seeing the rest of the top 10, what do you think about his portfolio as a dividend growth investor and related to his goals?
I believe it's quite a smart portfolio, and we don't speak about ETFs a whole lot. We've spoke about them in a couple of shows. I know from an Irish perspective, it's a pain investing in them, but I think this is a great strategy for 90% of retail investors. I really do. Spreading out 15% in a worldwide ETF. I mean, you have your diversification there, you have your sleep well at night portfolio, and you just keep adding to that like clockwork. There's no real work or thought process behind that needed after that. Once you make that decision, you can just keep adding. His other positions, I know Bristol Myers, you quite like, and you've added to them recently. British American Tobacco, I love the company. I'm not 100% sure on Process either, so I'll maybe let you speak. And then Johnson Johnson and Realty Income. So he has a nice balance. He's focusing on really solid companies. You haven't mentioned some of his other companies. He's got Google, he's got Alibaba, which he's probably feeling the pain like both of us. Some Ahold, Microsoft, and AbbVie. And honestly, I like every single one of those companies. So he's focusing on quality, but I like his strategy here. Have a little bit in growth, a little bit of dividend, and then have your ETF on top. So I think it's quite a smart approach.
Yeah. Plus one on everything you said. I haven't done the math, so I don't know what the current portfolio yield is. So I'm
Yeah,
just wondering, like 2033, that gives us like another 11 years, let's say, in a bit, to gain passive income, right?
yeah,
For this, I don't know if the balance at the moment is a little bit too much towards tech. And I also don't know what the world index is yielding. I believe a relatively low yield. So with that, what I'm trying to say is like probably his portfolio is still in the early days. I guess the high yielder here is British American Tobacco with
yeah.
some Bristol Myers at a close 4% forward yield or something like that. But there are quite some non-yielders in here as well. So it is an accumulation phase. Seeing all the tech in there, I would say probably in 2022, it would be good to get really the fundament in place for the dividend growth part in the portfolio. And I think it's normal, right? Because it goes in waves. If I look at
Yeah.
my own portfolio development in the first 2, 3 years, you are kind of picking up what is at value at the time. That's why probably AbbVie is in there, Bristol Myers. But for instance, there are stocks like that were for me very attractive. Microsoft trading at $40, right?
Yeah.
Which I was snooping up at the time. So it comes with waves, I guess. And yeah, if I see this, I will probably shift a little bit next year, just next year, to really strengthen the core and dividend stocks. Like, is it Johnson Johnson, Realty Income, and AbbVie and BMI, or is that it, or is there more to it? Right? That's my
S-
just my food for consideration,
Yeah.
Martin.
I I can't speak Dutch, and I know a lot of this is
Yeah.
wrote in Dutch. Is the goal to retire on dividend income, or is it to retire on investment? What he makes from his
Um,
investments?
it's not really clear, but his overall strategy is defensive with a emphasis on dividend growth.
Mm. Because I always wonder, and which is why I struggle with growth companies with a goal like that. For example, when do you sell Google? When do you sell Baba?
Yeah,
At what point do you sell them? And is the plan to sell them to buy more dividend stocks in the future to help with that goal?
yeah,
But that's what I would struggle with personally. I don't think it's bad to have them there, but when you talk about your goal, and if your goal is dividend income, they're not dividend income payers. So
yeah,
where did
and
where do they fit in that goal, or what is
yeah.
the plan for those?
What is specific also to the Netherlands? You have a wealth tax, so you get taxed anyway, but you don't have capital gain tax on stock trades. So what you could do is take growth stocks, sell them at a certain moment, and replace them with dividend stocks as well, right? So
Yeah,
it's not really clear, but I think Marta will be able to get back to us on that one. But generally, from what I can say, I would say strengthen next year, focus on a little bit on the strengthening of the core of what the dividend stock should be.
yeah.
Good.
But it's a nice mix. There's a nice mix
I like
of
it.
companies there.
Definitely.
Yeah.
It gave me some inspiration as well. So, hey, Marta, thanks so much. Probably we learn more from you than you might learn from us when we are analyzing this. But that's why we love this section as well. Maybe it's even more for us than for the listeners. Okay. So, hey, we've got also some few questions this week from some of our listeners. So let's address a few of them as well. The first one comes from Miwosh. He's asking, or he's effectively telling us to buy Yumicore. Yumicore, I looked them up. They're in the recycling business. I can see why he likes it. Always when there's a 10-15% drop, he reaches out on me on Twitter and saying like, "Hey, EDGI, might be something for you." Well, I've done my screening, Miwash. I don't like them. I know they were trading at 60 euros, now at 35 euros. I don't like it because they have inconsistent dividend paying. I need to see consistent dividend growth. So I cannot trust on this stock during bad times because they will cut the dividend. They did that also. They only paid in 2020, I think, an interim dividend, not a final dividend. So
Yeah.
you effectively have no income. And I don't want to eat only chleb with masło, as they would say in Poland, bread with butter. I want to have at least peanut butter on top of it. So, you know, it's not a stock for me. But thanks again for always inspiring me with new stocks, Miwash.
If you're the type of person who likes to buy and sell companies, there is loads of opportunity with this company. I'm just
Exactly.
looking at their
Exactly.
chart; they seem to go up and
Yeah.
down quite
If
regularly.
you're a
So
trader, this might be a really good one.
some quite good opportunity. It looks like there's good opportunity. I don't know the
Yeah.
company whatsoever, so I can't
Maybe
comment. But
something for your wheel strategy.
maybe
Yeah.
might check him out. Okay, so dividend.exe has asked us what we think about Medtronic. Is it more interesting now after the beat down?
Yeah.
I know it's a
So I did a
company you
deep
like. Yeah.
dive on my blog last year before the summer, so it's already more than a year ago. I've got an article about Medtronic, and I regret not buying it last year. I remember some readers saying like, EDGI, just buy it at 80, why it's 70, low 70, 75. And I regret it. I was really looking for a margin of safety. But the issue for me with Medtronic, I remember when I was analyzing it, is their cash flows, their free cash flow.
Yeah.
It doesn't look so strong, the free cash flow growth. So this is why I do have a margin of safety on it. $100 for me is still too expensive. I might consider something in the well, around 90, high 80, at least few shares. But I stick to my conviction in the high 70s that it's really buyable
Yeah.
at the time, because the free cash flow is not having a perfect trend as what we love to see, because that's in the end what really pays us the dividends.
Yeah. It's a great Irish company, isn't
Exactly, exactly.
it?
Just like Apple.
Yeah. We've
Yeah.
adopted it. We've adopted them.
And Centrino is asking, he's saying, like, sometimes he has difficulties to spread his buys over the month, like either a lump sum every month on the broker. And then when there are red days, effectively he buys too quick. Yeah, he buys it all, and then he has no money left. And I guess what he's saying, the share price continue to go down, and he's handcuffed. So what would you recommend to him? Like maybe buy something every week and split it in quarters? What would you suggest?
Uh, I mean, I see this a lot on Twitter where people buy the dip on red days, and then when you go and check the share price, it's probably the same price as it was 2 days ago or 3 days ago. It hasn't
Yeah, yeah,
hasn't
yeah.
hasn't hasn't dipped. I wouldn't worry too much about it. I can tell you what I do, which is I put in money every month, and I buy what I perceive to be value at that time. Um, it's hard, and sometimes FOMO happens. You might buy something, it might drop, and you might think you might have got them at a better price, but you got to think of the long term picture here. And if you just, I have, I get paid in the middle of the month. Money goes in. I get paid on a Thursday. Friday, I transfer that over to the broker, and even if I don't buy on the Monday, that is sitting there for me that week whenever I get it. So it's just consistency for my behalf.
Same
So
here, same
yeah,
here. What for me actually rather is happening to me always is like the last week before I get my salary, I might not have spent it yet, and then
yeah,
I'm eagerly looking to spend it because I one of my learnings was that I have the nature to wait. I can be
mm,
really patient, and that's actually not to my advantage. So I have to spend it in a month, otherwise I damage my dollar cost averaging. And this was a expensive learning actually because I did this in 2017, 2018, 2016. Those 3 years I underinvested.
yeah,
That's why I'm not having the dividend growth as what I had in my plan to retire at a certain age. So I just lost a year effectively almost with this, right? So I need to really push myself then always to buy it in the given
yeah.
month. So
Because you got to remember, we make fair value assumptions, but
yeah,
the key word there is assumptions.
assumptions. Yeah.
Do you know? So what we perceive to be fair value today, we might look back, and Microsoft is a classic example of that. I had them valued at $180, maybe 8, 9, 10 months ago, and now look at them, they're 350, and now we're saying their value is maybe $250. So it constantly changes, and that will ebb and
Yeah,
flow. So I would try and not get too bogged down on timings and just be consistent. Have some sort of plan, whether it's monthly, quarterly, half yearly, whatever
exactly.
whatever suits. But just try and stick to the plan and try and not get too hung up on if you miss buy on a red day and it goes down a couple of euro or a couple of dollars
Mm,
afterwards.
super. Hey, and how do you think then about position sizing? Is there like a set of number of positions or percentages in your portfolio?
Yeah, I'm aiming for maybe 40 max. I'm at about 27 or 28. Actually, 28 now. I think I bought Enegas. I mentioned last week I was
Mm,
going to buy them. I bought them on Monday. So I think I'm at about 28. So I've got loads of room for companies. I spent a long time towards the end of last year and this year ironing out all the, I would say, deadwood. And now I just want to focus on quality. So anything that I add from here, I want it to be a quality company, and I don't want it to be another Walgreens. Although Walgreens has been great for me, I don't want turnaround stories. I want quality, and that's probably what my focus is going to be. In terms of position sizing, it's not my main focus at the moment because I'm still
yeah,
accumulating, and there's times where I might be overextended on one company because they might be more value to buy at
yeah.
that time.
So this question was from Future Dividends. I've got actually a whole blog post about this. It's called
Yes.
My Allocation Strategy.
Mm,
Really quickly, 40 stocks, 4 tiers. Top tier 4%, second tier 3%, third tier 2, fourth tier 1. So maximum 4%. Microsoft currently is around 8 to 9% in my portfolio because I'm in the accumulation phase.
yeah.
But generally, at the moment I retire, that's how my portfolio should look like. And over the next few years, I should really move towards that. And that's why I need a company like Nike in my
Yeah.
portfolio.
But the opposite works as well. I mean, I think the dividend growth investor and is it dividend hummingbird, they have huge portfolios, a
Yeah,
hundred
like more
a
than
hundred
100.
companies.
Yeah.
Yeah,
Or
and
Ellen. Yeah,
yeah, this coffee can a style and that can 100% work. I mean,
exactly.
it can
Exactly.
100% work as well. So
They
I don't
probably might outperform us even in dividend growth because they have less bias to what they buy.
yeah, exactly. And
Yeah.
and and you know what? Like I said, I've sold quite a bit. I know you've sold some companies as
Yeah.
well. With their approach, they don't sell. They don't need to sell. Maybe a
Yeah,
dividend cut, which is I know the dividend growth investors
yeah,
hard stop, but other
yeah,
than that, they're not selling. They're just literally doing what I say I do, but I don't do, which is buy and hold
yeah.
forever.
Yeah, they just buy when it's 3% yield. Everything
Mm.
above they consider buying when so they focus more on the screener. I do even more deep dive because I want to know what companies I own. But if you go for 100 stocks, you effectively buy an index. But if you always buy at 3%, you get a better index than when you buy the frigging index on the stock exchange because you get all the crap with it, which is like yielding nothing or dividend cuts and that's why it's much more easier than to do it if you have the time and the passion to do it individually.
Yeah. Okay. Jeff has asked us how we feel about the 3M move.
Yeah, I
We
think we spoke about that, and
Yeah.
I feel pretty comfortable with it. It's really like, you know, a fly on the wall, kind of. Nothing special.
Okay. And Daniel then for the last question has asked us, what do you expect to be your three best dividend stocks already in your portfolio and why?
So the best performing, I take it.
Yeah.
And I'll take it from a dividend growth point of view. Yeah.
Okay.
So I expect Microsoft to have a really good dividend growth in my portfolio. I expect AbbVie to continue to surprise us with dividend growth. Actually, pharma as a whole, I expect to do a lot in dividend growth.
Yeah.
And yeah, that's about it actually. Yeah.
Yeah, I expect AbbVie to be quite good. Lockheed Martin, I'm expecting them as well to maybe not dividend growth, but certainly share price. I
Mm.
think will bounce back over the course of the year. And Shell, we know Shell are expecting to reward us quite handsomely, so I expect them
Yeah, but
to.
Shell has already announced that their dividend strategy is like 4% annual growth.
Mm.
Yeah, so they have not stuck to it. They have done much more, but that's kind of the commitment they have done to shareholders for the upcoming years.
Yeah,
Yeah.
but we know that as you said, they don't stick to it. I expect them to pay more. I really do.
Yeah,
I do.
with the cash flows and the buybacks, they will generate a lot of
Mm.
shareholder wealth. Yeah.
The one company I am interested the most in, and I spoke, man, I pronounce this wrong all the time, but it is Beatrice. I'm
Yeah.
really, I think they can do quite well. I think they're incredibly cheap, not from a dividend growth perspective, but maybe more from a capital appreciation perspective. And
Mm.
as a company as a whole, I'm interested to see how it actually goes.
Yeah. Super.
Okay. I don't know if we have a stock pick this week, but you have been active. You've bought something this week.
Yes, and this will come to many as a surprise, but I initiated a position in Intel for the first time. I
Boom.
gave already a bit of an announcement last week, a heads up. And then after the podcast, I looked one more time into it and I bought some shares at $50. It's an initiating position, really small. But when I was thinking about Pat Gelsinger, I had a big, major deja vu with what I saw with Satya Nadella when he came in. Satya Nadella had to really clean up the house. There was no any evidence really yet when he came in, but I feel the excitement back in the business. It is like people seem to be happy again around that stock. He is having the right plan. The plan really resonates with me, but I was really impressed when he announced like last this year in March or something like that when he rolled out his plan. Right, we spoke a lot on it on the podcast as well. But I watched the what was it, the Innovation Day or something like that, or the
Yeah.
Tech Day the other
Yeah.
day, and they were just like overclocking processors and all these kinds of stuff, and now announcing partnerships. Okay, with IBM, you know, it's not a company that I put my bet on, but also Microsoft. They're really getting back in business, and then I started thinking, like, okay, they have got also some support there because of the trend of bringing back business and protectionism, not having dependency on China. So
Yeah.
I don't think the American government will let this company be in trouble. And then having Pat Gelsinger, who's inspirational. So it is to your point, if they have a good CFO besides it with the money management, I wanted to start accumulating now a little bit of position already. 50 is more like for me to have it in my portfolio. Um, but yeah, if it goes to 45 or lower, I will use that really to build out a position. This is
Yeah,
more like an initiating position.
yeah. I mean, mm, Pat's been inspirational since he came in. He's bringing engineers back, and that's his goal. He wants Intel to be. I mean, what do engineers do?
It's the heart of the company. It
Uh,
should be. Yeah.
they're creative. They like to play with things, and that's where you will see magic happen. So he's starting to bring that back. He's bringing that culture back. You will start to see top people wanting to work for that company,
Mm,
which will only grow. And that's what was happening with Microsoft. Remember,
exactly.
you see a company
Exactly.
like that, and they're recruiting top talent. That's what's going to get the engines ticking and
Yeah.
really drive this company. So it's exciting, but I'm as I said, I'm in no rush with Intel. I'm happy.
Exactly.
I'm
Yeah.
happy you got involved. I was a cheerleader for them for years, maybe not years, but it's an exciting time for them, and
Yeah.
it's interesting. But they are still what I said. Uh, Try not to focus next year. They're still technically a turnaround. It's not a straight line.
They
Yeah,
are, and that's why it's an initiating position for
yeah,
me. It's usually for me an initiating position means like I start now really to follow the company seriously. But I felt like, yeah, like I said, it's for me like a deja vu with Microsoft when they were trading in the mid 30s, high 30s. So um, we have time, probably still 1.5 year to see it really hit the numbers. But yeah, it's kind of my conviction already
yeah,
showing it. And I had to deploy my money this month, so I bought already quite some Bristol Myers lately. So I thought like, okay, then Intel's really the right thing to store my money at in the moment.
good, good. Oh, nice one. I'm happy for you.
Thank you. I'm biased now, so. But I'm glad we got rid of this old CEO, because I would have never owned a piece of Intel.
Yeah,
Anyway, thanks, EMF. I know how busy you are with work as well, but we keep on rolling, right? We keep on grinding. We get this podcast. It's not just for you and me. It keeps us honest, but it's also for all the listeners out there that are, you know, scraping every month some money together. Like even if it's a 5% savings rate, a 10% savings rate, with the hero and these brokers, zero commissions. Come on, let's keep all investing. Let's help each other out. December is a busy month, but yeah, let's not forget about our savings rate and why we're doing this.
yeah. I'm actually looking forward to the end of the year, maybe looking back and seeing how we performed this year. It'll be
Definitely,
quite 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 different to this time last year when we had a pandemic. So it'll be
definitely.
good to reflect on. But hey, that's in the future. Thanks to all our listeners again for sticking around. I apologize, we are late. I was drinking, you were traveling. I mean, these things happen. It's life, but we will promise to try be on time next week.